Good morning, everybody. It's Thursday, May 25th, 5:30 a.m. Central Time. July corn futures up 1 3/4 at 5.89. July soybeans down 1 3/4 at 13.22 3/4. July Chicago wheat down 1 at 6.05 1/4. July Kansas City wheat down 4.5 at 8.07 3/4. July spring wheat down 1.5 at 7.97 1/2. Mackenzie, it's about that time of year. We're going to start off with weather, and this is going to be something that we talk a lot about here the next 6 weeks or so.
Weather forecasts for the central U.S. Corn Belt are dry through next week. Almost all of Illinois, Iowa, Indiana, Ohio, and Minnesota will see little to no rainfall over the next 7 days. The 6 to 10 and 8 to 14-day government maps favor odds of below normal precipitation and above normal temperatures. This morning's GFS model suggests that rain returns to Iowa, Missouri, and parts of Minnesota around June 4th. Still, Illinois and Indiana remain dry even through the first full week of June.
I'll just say it. I think this is a bullish forecast, honestly. We're going into a 3-day weekend. The weather markets creep up on you pretty quickly. Let's zoom in on Illinois and Iowa in particular. This is the GFS, the longer term model, out through June 9th. And there is very little rainfall expected for the majority of Illinois outside of maybe this northern area. Essentially nothing for Indiana, very little for western Ohio, very little for the eastern half of Missouri, very little for Wisconsin, very little for Michigan. Minnesota's kind of a mixed bag. If you're in this southeastern portion, you're going to be dry. So you got a couple things going on here. I mean, big money managers, funds, they're short the corn market, right? You've got a 3-day weekend coming up. Do they want to be heavily short going into the 3-day weekend looking at this forecast? Now, these forecasts, they can change at any point in time. Just yesterday at midday, we saw a slight shift wetter in this GFS, and it caused the market to back off a little bit. And this morning, it looks drier again. So, guys, like what I have experienced in the past in this sort of setup, and this is not a guarantee of what's going to happen today or even a prediction, but in the past, when I've seen this sort of setup, if the market opens lower, it closes higher in a lot of instances, and that's, again, it's not a prediction or guarantee of what's going to happen today. But this is a friendly looking deal from where I sit, the way that I see it here today, certainly.
If you guys are not already subscribed to our premium content, you sure need to do so. You won't find content like this anywhere else. Joe, what did you cover yesterday?
Okay, so Matt Bennett was on with me yesterday, and we digged a little bit deeper into this weather market deal. So that dry forecast that I talked about for Illinois and Indiana, it is not a death sentence at all. A lot of farmers would tell you that, hey, you know what? If we have a dry stretch through, say, late May into early June, followed by some rain, that could actually be ideal. So I'm not saying this is like a bad thing for the crop necessarily. It's just that if this dry pattern continues, that's something that would be friendly to the market, and the market's going to trade all of this in real time because they don't know what this next forecast is going to say. So me and Matt went into some depth on weather markets, on the crop situation, how to handle these crop scare events if one were to occur. If you guys want to see the premium content, new videos every single business day, I'm going to have one that's blasted out a little bit earlier than normal today regarding grain marketing because sometimes these crop scare events can be some of your best marketing opportunities of the year. Go to standardgrain.com. You can sign up this morning, $50 a month. You can sign up on your phone or computer with your credit card. It takes about 1 minute. I'll send you over our most recent videos and jump on the text list for that video here later this morning.
Today is the final planting date for farmers to plant corn up in North Dakota. Acres planted after today will incur daily penalties in regard to insurance coverage. Reports from the state have been highly variable due to variations in local weather patterns. Many traders believe that the state will lose a material amount of corn acres versus March intentions.
I have absolutely no clue what's going on in North Dakota. I think some traders believe that we've lost 1 million acres of corn and gained 1 million acres of soybeans in North Dakota. And maybe that's why the new crop soybean market in particular has been very soft. But you know something, Mackenzie? We had a video I did earlier this week about the crop progress reports and how figuring out acreage in real time is like impossible. And I had a bunch of farmers from North Dakota respond, and the responses were hugely variable. Like some of them were, Joe, we're going to get all the corn planted in this county. And some of them were, Joe, we're switching a bunch of acres to soybeans in this county. It was hugely variable. If you guys are in North Dakota and you're watching on YouTube, drop me a comment in the YouTube video here and let me know what you think, because honestly, I don't have a clue. I think some corn acres will be lost versus intentions. The intentions number for corn was 3.75 million, which is up quite a bit from last year. So is it going to be a million lighter than that? Half a million lighter? Million and a half lighter? I don't know, but I think a lot of people are thinking that way, certainly.
U.S. ethanol production decreased slightly week over week. Weekly output of 983,000 barrels per day was down 0.4% compared to the previous week and down 0.8% versus the same week last year. Ethanol stocks were pegged at 22.04 million barrels. The print was down 5% on the week and down 7.4% compared to the same week last year. Implied gasoline demand was up 6% on the week and up 4.5% versus the same week last year. On average, over the last 4 weeks, implied U.S. gasoline demand is up 2.7% versus the same period last year.
I don't know why ethanol production isn't better. The margins are good. Seasonally, we should be increasing in terms of weekly ethanol production, and we've been more flat. Now, you've got a big drawdown in stocks. That was a really big drawdown on the week, but that's normal seasonal stuff. You typically see ethanol stocks draw down, as driving season, if you want to call it that, approaches. But these ethanol production numbers are problematic. To this point through the marketing year, we're running like almost 3% behind last year, whereas USDA says we're only going to decline by like 1.5%. USDA is probably going to have to chop their corn demand via ethanol number on the balance sheets, and I suppose you could see a big surge in June and July. That does happen, and that would be normal seasonally. We really need to see it because we don't want to see this carryout number get any bigger, and it's probably going to get bigger anyways because of the export situation. But this ethanol thing is another problem potentially.
Recent rains have helped to improve the drought situation in Argentina. The Buenos Aires Grain Exchange said yesterday that rainfall is critical for the country's winter wheat crop, which is typically planted from mid-May through July. The exchange estimates this year's harvest at 18 million metric tons, up sharply from last year's 12.4 million metric tons. USDA projects that Argentina will be the world's 9th largest wheat producer this year. China, the European Union, India, Russia, and the US are the world's top wheat producers.
I'm not so much concerned about this as it relates to wheat. They're the world's 9th largest wheat producer. This is not going to make or break the wheat market by any stretch of the imagination. My question or issue would be this: is this like going to turn into a drought busting event in Argentina? And if so, what does that mean for next year's corn and soybean crops? That's a big deal. So Argentina had an absolute disaster this growing season in regard to corn and soybeans because of the worst drought in 60 years or whatever it was. And now you've got some rains coming back. Now this is the last week's worth of rainfall that's on my screen here. And some areas on the coast here got really wet, but other areas did not. So it's not a total drought buster yet, but we could be trending in that direction. Absolutely something to keep an eye on.
Yesterday's debt ceiling discussions were described as productive by both sides. Despite this encouraging news, yesterday marked the Dow Jones Industrial Average's 4th straight session of losses. The Dow ended the day down 0.8%. The S&P 500 declined 0.7%, and the Nasdaq Composite slid 0.6%. Most investors still expect Congress to raise the debt ceiling by June 1st. According to economists, if a deal is not achieved, it may trigger an economic meltdown on Wall Street and tip the U.S. economy into a recession.
Stocks are back higher this morning, or at least the S&P and the Nasdaq are. A lot of that has to do with earnings from a couple of companies. One of them in particular is NVIDIA, the chip maker, up 23% this morning following earnings yesterday. So that helped to pull, along with some other things, the S&P back higher and the Nasdaq back higher. But make no mistake, there could be problems in the economy and the stock market and a whole bunch of other stuff if they don't get this thing fixed. I think they will get it fixed, but we just haven't seen that resolution just yet. We've got GDP out later this morning, also initial jobless claims. What's up next?
China's benchmark stock index has lost all its gains for the year. On Wednesday, the CSI 300 index dropped by 1.4%. Chinese stocks have steadily fallen since the country reopened after COVID back in January. January. Geopolitical uncertainty, a declining yuan, and developers' financial issues have been blamed for the downturn. Traders are also keeping an eye on the potential effects of China's new COVID wave. China is the world's top importer of soybeans and wheat and is projected to be the world's second largest importer of corn this year.
There's a COVID. Is there another COVID wave?
Yeah, so they're actually expecting by the end of June per week, they're expecting 65 million cases. That is per week.
Well, you look at this chart, and this is not the chart of the stock market's not the economy, but this is a bad look for China and the stock market. And even if you peel this thing back, I mean, the Chinese stock market's weird. I don't know a damn thing about it. I'm not going to pretend that I do, but they just barely eclipsed their highs from like 2007 pre meltdown in 2021, and then they like gave a whole bunch of it back here. It doesn't look good, and this is, of course, is important because China is such a tremendously huge importer and player in the global grain markets. It's absolutely an important deal to watch their economy and the things that are going on there. Export sales this morning at 7:30 a.m. Central, guys. We've got the bar set pretty low. Current marketing year corn sales could be net cancellations up to 500,000, maybe up to 400,000 positive, maybe some small net cancellations of soybeans up to maybe 300 positive. Wheat should be flat, maybe some small cancellations, maybe some small net purchases. But the bar set very low there this morning. Cattle had a good day.
Yeah, they sure did. Cattle futures were green across the board on Wednesday, supported by higher cash cattle prices. So live cattle futures closed an average of 104 higher. Feeder cattle futures closed an average of 133 higher. As I stated, fat cattle trade got going yesterday, and it was sure good. Down in the southern plains, cattle traded at 171. That was a buck higher than last week. Here in Nebraska, fat cattle traded between 180 and 182. That was up $2 to $4 compared to last week. There were a few sales reported in the western corn belt at 180 to 182. Those sales were anywhere from $3 to $5 higher compared to last week. Choice box beef ended the day at 298.30. That was down 244, and select ended the day at 283.79. That was up $2.51.
Outside markets this morning, guys. U.S. dollars up just a little bit. The S&P's up 26 points. The Dow's down 60. The Nasdaq's higher. Again, a lot of that has to do with earnings from some of these tech companies. Precious metals off a little bit. Crude oil is down $1.23 at 73.10 last in the July WTI. Have a great day, guys. We'll talk to you Friday.